right. Well, let's get in a view coming in from Deven Choksey, MD at DRChoksey Finserv, who joins us on the show. Hi, Deven. Good morning. Good to see you in as always. You heard that conversation that Tata Motors had with Parikshit. What's your view on TAMO? And also, where does it come in your preference? Or do you like something else in the auto space?
Good morning, Nigel. Well, I think the company's commentary is remaining quite subdued and they are circumspect about various things. In my viewpoint, I think they're probably counting the worst at this point of time. Whereas I think the other side of the story emerging, I think, very strong. We have seen a significantly good amount of jump in the commercial vehicle segment, and I think that's been echoed by even the peers in the industry. I think that's what is important to understand. On the other side, I think the demerger of both these companies taking place in passenger vehicle and the commercial vehicle segment, two separate models, which means I think the company will have better ability to handle even the subjects like cost pressures. I think which probably I think management is refraining from talking it out at this point of time, justifiably maybe. But in my viewpoint, I think whatever the worst that we are talking about is already being seen in the price. And I think the opportunity out here in the current financial year, one, with the higher amount of disposable income in the hands of people, the discretionary consumption is going to increase and auto ancillaries would definitely be the beneficiary out of it. JLR portfolios bringing up the new models, and I think that's where probably with some kind of road bump, I think in this case, but still I think they have got the opportunity to export to other parts of the world. And in my viewpoint, I think overall picture as we progress during the course of the year should be emerging a little bit more clearer for Tata Motors. At this point of time, we hold, and I think we would like to buy in a current situation if the market gives opportunity.
Okay, that's a call on Tata Motors. Deven, hi, good morning. Good to have you on. We usually talk about all the secondary market action, but I must ask you about the primary market action as well, because it's a big day. HDB Financial Services finally is going to be going out to investors. I mean, they're out there, issues opening up. Of course, the bulk of it is an OFS. There only, I think, about 2,500 crores comes into the company. But how do you find it? Pedigree is fine, but valuations, business growth potential. If someone is looking at owning an NBFC, should they consider this in the issue at all?
Yes, Sylvie. Good morning. In my viewpoint, I think yes, one should. Rightly rate, I think the good promoter, good pedigree. Remains subdued largely because I think operated under the umbrella of the bank for a good many years. Now they're getting a chance to, I think, play their own game with the individual segment of customers, the retail segment of customers. They have the SME, MSME segment of customers as well. So those products, I think, which they exclusively cater to, I think they have a reach, and that is what is more important. With a 1 lakh crore plus kind of a year, I think they already established the reach in various parts of the country, and that's more important. They have lagged behind in adapting to the technology, which the likes of Bajaj Finance have done remarkably well. I think another scope, probably I think once you're out of the shelter of the bank, probably you can do it, I think, far better as I see it in this kind of a situation. Overall, I think remain positive. Valuation-wise, not so expensive. So certainly, I think with this particular OFS plus public issue, which we are experiencing, I say is a good opportunity to buy this NBFC as well. As I see it, as the scenario unfolding, Bajaj Finance, Geofin, HDB, and likes of Poonawalla, 3 or 4 main NBFC companies could possibly be, I think, one I think which is going to be in the portfolio of the customer. So one would remain bullish about the prospects going forward.
Okay, so that sounds like a positive thumbs up for HDB Financial Services. By the way, just a reminder, we'll be speaking with the management as well at around 9:30. We'll try and get some more perspective on how they're looking at their business and their growth plans. Deven, another pocket of the market that seems to be getting a lot of attention now is the whole consumer space. And the increasing chatter that at least we hear is that, should start looking at consumer stocks. They've underperformed. And as disposable incomes rise with the income tax cut, maybe this part of the market can revive again. First of all, do you agree with that thesis? And if yes, then what part of consumer would you play? It's very big. There's staples, there are your food companies, food delivery platform companies, there are retailers like Trent. How do you look at it?
We will deny of the fact that more disposable income in hands of consumer and higher amount of spending from current year onwards we are going to be experiencing because of the tax saving in the hands of the individuals. So that is definitely for sure. At the same time, with the interest rate falling, the EMI component becoming more affordable, I think the discretionary part of the consumption could possibly be seen as, I think, a better growth orientation in the environment hereafter. So I think whether you call it, I think money going in this case, like buying the houses or buying the autos and some other stuff, I think it is going to be a reality in current year and we'll be seeing higher growth coming in. At this point of time, I think the proxy to participate in this growth, I think would be financial companies, the NBFCs in my viewpoint, wherein I think the higher amount of credit growth is being taking place due to, I think, this kind of a situation. And in my viewpoint, I think if you are going to clock around 20-25% kind of a CAGR growth in the lending due to the surge in the consumption, maybe I think they are not bad opportunity at all. And fortunately, they are not so expensive compared to the pure consumer company, I think, which are expensive on the valuation. So one will play a little safe, buy, I think, safety first, and then possibly take some amount of extra risk at such point of time.
Okay, all right. So that's a take on consumer. Deven, oil prices, the other big headline, right? I mean, up $10, $15, then down $10, $15. From a stock perspective, the listed stock perspective, the stocks have been very volatile. Yesterday, obviously, ONGC fell because of the sentiment. But do you like anything, any buys, whether upstream or the downstream refiners like IOC, BPCL, HPCL?
So I think one indication we get from most of the crude oil derivative consumers, which is most of the chemical companies, specialty chemical companies included, they are talking about buying the derivatives at a significantly, I think, lower cost compared to what they've been buying up till now in last 2-3 years. So from that point of view, I think they are basically talking about increasing the margin. In a way, I think it is interpreted as increasing the margin. On the other side, the specialty chemicals per se are commanding better prices in the premium because of the demand situation in the global market for whatever other reasons that we are talking about. In my viewpoint, on one side, the cost remaining lower, other side, the demand situation improving, margin getting increased due to the delta factor, as well as I think higher amount of volume growth that you are going to see. Definitely good sign for some of these companies which are into the, and we definitely like, I think, the companies which are in the specialty chemical segment, be it in the application like pharma or agrochemicals. I think the business environment looks quite conducive for growth.
Okay. Just checking markets across Asia once again to see what's the texture and the color. Actually, markets beyond Hong Kong are quietly or moderately positive. That's what you have. It's actually the Hong Kong market, Taiwan and Hong Kong, which are leading in terms of the gains this morning. That's what we have, at least for the time being. Okay. We have some statements also coming in from the Chinese Premier, Li Kang, who's been speaking at an international conference saying that trade should not be turned into a political or a security issue. Just some commentary coming in from Chinese leadership this morning. Okay, Deven, otherwise, overall market advice, I mean, the broader market has been doing very well. The index is getting stuck at around 25,200, but broader market is alive and kicking. Any new ideas that your team has come up with? Obviously, all investment, long-term fundamental calls. Anything interesting?
We continue to like, I think, some of the companies. I was talking about, I think, prospects for the housing finance because of the growth in the spending and higher amount of buying of the houses as well, which is witnessed in the real estate companies' commentaries as well. So companies like Bajaj Housing Finance, those slightly premium quoted, but definitely, I think, a different game plan for execution. We find, I think, those kind of opportunities from long-term perspective remain extremely appealing, extremely convincing opportunities. So, yes, definitely, I think they are not participating in the momentum at this point of time because of their high valuation at which they are quoting. But that's where probably investors get a chance to buy the SIP way of investment in their portfolio, accumulate such kind of stocks for a longer period of time and stay invested. That's where I think you get money. I think so. We are selectively looking at such kind of quality ideas. Similarly, I think in the engineering R&D space, which we also talked about in past, companies like Tata Technology, they remain relatively, I think, a good stock. I think from the point of view of seeing how the growth is being unfolded for them. As we see, they're sitting on prospects of around 120 130 billion USD total addressable market for the segment in which they are operating, or part of the segment in which they are operating. Even if they end up cornering even a small percentage of minority stake in this particular market share in the global space, with likes of BMW kind of tire, I think this company holds a long-term potential for very, very high growth. So again, I think systematically adding it into a portfolio for a longer period of time and sit tight with your investment kind of an approach could possibly be the more better approach in this environment for such kind of companies.
Okay, all right. Deven, Hindalco's gone ahead and made a small acquisition, very, very small, 125 million USD, which is that, it's roughly around 2 times sales. And if you look at it on an EV upon a beta basis, it's around 8 times. Very, very small for them, but it's a step in the right direction. What do you make of the stock, or do you prefer something like a Vedanta that has a special situation that's playing out? From the metals pack, what do you like?
So in general, I think the metal remains extremely convincing story for me. I think both ferrous and non-ferrous, both of them are sitting on a very, very high demand prospects at current level. At the same time, the main input cost, the energy cost, is remaining low for them, which is a good sign because the margins will possibly be speaking very well in subsequent period of time. So I think we are relatively bullish at this point of time on the prospects of metals going forward. The white metals, we like zinc more at this point of time, and of course silver, which is the mainstay of Hindustan Zinc. So we find that I think there the value proposition is significantly more convincing. And given the kind of expansion that they want to carry out, I guess I think it is a 3-year or 4-year roadmap also, which becomes very, very clear. So yeah, selectively, I think the companies like Hindustan Zinc or Vedanta, because of the you mentioned about the special situation of demerger, I guess I think those companies are looking really to be more safe. Even like Tata Steel kind of company, which is corrected on the price, looks I think quite an interesting proposition from current levels.
Okay. All right. Deven, good conversation this morning. Thank you so much for taking out the time and being with us.